Hi friends, good day. Today I am taking out this third problem. Okay, last class we have done this. This problem we have done fifth one. The same problem is nothing but November 15 that has been given in the material. So there are some problems which is same like the model which I am going to tell you. I think this is same problem. Only thing is that you got current account of Tanish. Previous problem only ABC. I think C doesn't have any current account balance. It seems to be, but in this case we have current account. I think this will be transferred to current account. Tanish current account will be transferred to Tanish capital account. Only thing is that previously the Yashwant Tanish to acquire interest in newcomer in the ratio of 3:2 at face value. Previously it was 1:1. Last problem it is 3:2. So the same goodwill which shall be valued 3 years purchase of super profit. Same problem. Clear to all of you? This you can try. This you can try. Same problem. 16 marks you can see. Last class discussion. This was in IPCC actually 2015. We used to have this as a group 2 syllabus. Now previously it was in group 2, then again it came back to group 1, again it went to group 2 now. Partnership accounts. 16 marks question. The same problem we have worked out today. Yesterday's class, right? So I think this problem has also been completed now. I think this is why you need to note down. Same problem, same model. Now coming back to this today's class. This is an important model. On 31st December 2003, Fairway Limited was incorporated with an authorized share capital of 10 lakh shares of 10 rupees each to take over the business carried on by the partners of X, Y, and Z. Fairway Limited is nothing but conversion, your sale to a company. On 31st December, Fairway Limited was incorporated with an authorized share capital of 10 lakh shares is to take over the business carried on by the partnership. It's nothing but you are selling the firm to a company. Clear? Then what happened then? The balance sheet of the partnership, when you are going to sell or when you are going to convert the firm into company, please remember you need to have the balance sheet of the company. The balance sheet of the partnership firm. This is balance sheet of the partnership firm. That is on 31st December 2003. Showed the following position. It has been in like vertical way he has given. Capital accounts and also current accounts. Now the important point you should know is that this balance of the balance sheet of the partnership firm as on 31st December 2003. But whereas if you look at the current account balances 31st December 2002, it means this is opening balance. This is interest that has been added during the year ending. Say 31st December 3 interest. 31st December 3 profit. Then drawings up to 31st December 2003. If you deduct, you will be getting this is nothing but he has not mentioned, but I am writing for you to understand. This is balance as on 31st December 3. He has intentional not given. I am writing this to explain you. So simple word, this is opening balance, add interest, add profit, less drawings, you will be getting closing balance. So this is nothing but current account balance, closing balance. I can put it like this. Current account closing balance, that is on 31st December 2003. So there, which method they are following? Fixed capital represented by freehold building. This is cost, depreciation, total is nothing but book value, or it is called written down value. This is nothing but accumulated depreciation. Okay, original cost minus accumulated depreciation is equal to book value written down value. Plant and machine 2,10,000. Accumulated depreciation 1 lakh. Similarly, 98,500 minus 23,500, 75,000. Okay. So current assets, stock, debtors, balance at bank, creditors. Like you go for current assets minus current liabilities is equal to working capital, the same way as given. Okay. So creditors information also we have got. So how many assets we are having? You can see 1, 2, 3, 4, 5 assets and 1 liability, excluding bank balance. Otherwise, you will be having 6 assets. 6 assets excluding bank balance is 5 assets excluding cash balance. There is a possibility even bank balance also can be taken. That is possible only when you are converting the firm into a company, or when you are selling the firm into a company. There is a possibility that balance at bank also may be taken, fully or partially. Please remember, I think that point is there in this particular problem. So what I am trying to tell you, why I am giving the list of these assets, because these assets other than balance at bank has to be realized. Option 1 means realized means sold in the market and can get the cash, or it can be taken by the partner, second option, or it can be taken by the company. Same is the case of creditors. Creditors can be realized, can be paid in cash, can be taken by the partners, or can be taken by the company. So we are having 6 assets total and 1 liability. Okay. You are also given the following information. Freehold land and building are to be transferred. Acha, whenever a company is taking out, first of all, we should know what is PC. That is important point. What is PC? What is the amount of purchase consideration? That clarity you people should have. Clear to all of you? Because for doing the problem of conversion, you need to have the information of purchase consideration. You need to have the information of purchase consideration. Freehold land and building ought to be freehold land and building ought to be transferred to the limited company at a valuation of rupees 1,50,000 and plant and machinery at 75,000. Stocks, debtors and creditors are to be transferred to the company at book values. That means what they are taking out, freehold building. This is AV, agreed value. What is agreed value? 1,50,000. Good. And then plant and machinery 75,000. One is more than book value, the other one is less than book value. In the last class I have explained you this. Then stock and debtors and creditors to be transferred to company at book value. Stock, book value 1,12,000. Debtors, book value 61,000. And they are also going to take out the creditors also. Creditors also at book value. Okay, this is agreed value. Now in this case, agreed value is more than book value. Here in this case, agreed value is less than book value. Now here agreed value is equal to book value. Last class I have told you, agreed value can be more than book value or less than. Last class I have given, if you want you can see the last class notes. More than book value, less than book value, or equal to book value. 3 possibilities. In this case, more than book value. Here, less than book value. Here, equal to book value. This is what agreed value. Whenever purchasing company is taking out the assets, it can be 2-3 possibilities. More than book value, less than book value, or equal to book value. Okay, 3 possibilities, remember. I repeat once again, agreed value can be more than book value, less than book value, or equal to book value. The motor vehicles are to be withdrawn from the business by the partners at the following valuation. So, what is the asset they have not taken? Motor vehicles. This motor vehicles has been taken by the partners. Taken by the partners. Taken by the partners. X has taken. This total motor value vehicles value has been given, but they have taken motor vehicle means plural form. You can't break the motor vehicle. You take part of motor vehicle. It can't be, no. So motor vehicle consisting of, I think, three partners are taking, means there are three motor vehicles or more than three motor vehicles, but we don't know how many motor vehicles. But these three partners are taking the existing motor vehicles of the partnership firm. The motor vehicles are to be withdrawn from the business by the partners in the following valuation: X 24,500, Y 17,500, Z 18,000. Now we are having bank balance. It is estimated that company will require an opening balance at bank of rupees 75,000. Excuse me. It is estimated that company will require an opening balance at bank of rupees 75,000. That means for the first time you are seeing they are not taking the total bank balance. Now, sir, you told me agreed value can be more than book value, equal to book value, less than book value. As far as bank balance is concerned, it's not like that 98,750 bank balance may fetch you 1 lakh or 98,750 bank balance may fetch you 90,000. It's not like that. Bank balance is to be at the same value, but whether they are taking entire 98,750 rupees or only they need 75. Now, in this case, they are taking 75,000 bank balance. Clear to all of you? They are taking only 75,000 bank balance. 75,000 bank balance taken. Remaining bank balance with the partnership firm. This estimate the company required opening balance means remaining balance with firm. I think you all are following this. Remaining balance out of 98,750. Out of 98,750, remaining amount is with the firm only. Clear to all of you? Out of 98,750, remaining 98,750 will be with the firm only. Okay. Okay. So, I think this information is clear to you. Let me tell you, I told you 98,750, no? 98,750 minus 75,000, it is coming to 23,750 rupees is with whom? Partnership firm only. Only they are taking part of the bank balance but not full bank balance. This is one important point. Then up to this it's clear. We got now. I think with this information we can easily go for ascertainment of purchase consideration. What I will do is that before I go into that, first let me give you working notes to this. Then you will be able to understand the remaining points. So what I do first here, working notes. I think the working notes when I talk about is clear to you. They are taking out the asset, they are taking out the liabilities. Which method they are following? Net assets method. When the information of assets taken over, liabilities taken over is given, they are following which method? Net worth method. Ascertainment of purchase consideration. Net worth method, or it is also called net asset method. Assets taken over. At agreed value. I told you agreed value can be book value, more than book value, less than book value. I am writing here. Freehold land and building 1,50,000. Then plant and machinery 75,000. Then we have seen stock 61. Stock 1,12,000. Debtors 61,000. Clear to all of you? We learn. We have seen this already. 150, 75. Stock 1,12,000. Book value only. Then debtors 61,000. Debtors 61,000. Okay. Then they are also taking bank balance to the extent of 75,000. To the extent taken. And if you look at the total of this, 1,50,000 plus 75,000 plus 1,12,000 plus 61,000 plus 75,000, it is coming to 4,73,000. Less creditors. Creditors also taken at book value, no? 93,000 or not 93,750. Creditors 1,70,000. Sorry, this is 2,71,750 minus 1,70,000. This, sorry, not 93,750. This is creditors. Sorry, please make a correction. 1,70,000. This is current assets minus current liabilities is equal to working capital. Okay, that I mean total of the assets he has given 3,05,000 plus 93,750, 3,98,000. So it is 1,78,000. Sorry, extreme. Otherwise, the entire problem might have gone wrong. 1,78,000. This is creditors. Okay. So creditors 1,78,000. So 4,73,000 minus 1,78,000. It is coming to 2,95,000. This is purchase consideration. So now after getting the purchase consideration, we should look at how this purchase consideration will be discharged by the company. And that is what we need to look into it. So first we got the information of purchase consideration. Clear to all of you? Next, you please feel that you are you should treat yourself like a partnership firm. This is my business. I am giving my business to company. Then you will be having the clarity. Don't see that I am doing somebody's problem. Whenever you got the doubt, to have a clarity, this is my problem. This is balance sheet is mine. With partners belongs to mine. And this is what your thinking should be. Then you will be able to understand that we got the clarity now. Purchase consideration. This is what they need to pay. They are taking our assets. Since they are also taking our liability. So try to understand. They are taking assets as well as they are taking creditor. That is why the amount that is to be paid by them will be reduced. Instead of we making payment to creditors, they have taken the responsibility of making the payment to creditors. How they are paying, it's their wish. These creditors, they may continue in the company's books, or creditors may be given some shares or debentures. That you will be having this kind of scenario. You will see in amalgamation of companies. There you will be discussing these things. The advantage you will be having is that luckily you are having amalgamation of companies also in group 2. So you will be having a parallel line. Whatever we have not discussed from the company's point of view, of course we are talking about partnership dissolved, company floated. There one company is being taken over by another company. The company which has been taken over will be liquidated. Suppose XY partnership firm has been liquidated, taken by XYZ company. Now XY company is liquidated, XYZ company has been formed. Concept is same. Now, whatever the balance sheet I am talking about, partnership firm, in the amalgamation of companies, amalgamation is merger, then the company, whatever the company balance sheet which is given, will be liquidated, closed, and new company will be formed. Same thing, but the logic is same. So we are doing only like partnership firm. Okay, I hope you all are following this. Huh? Listen to me carefully. Try to understand, read the question properly, try to understand my explanation. Clear to all of you? Now, okay. Now I told you second part of the question. This is regarding PC. This information how to calculate PC. Point number working notes 1 is completed. Now how they are discharging, sir? Let me see. Sufficient 9% unsecured debentures is to be issued by the company to the partner so that they will receive the same interest as they received on capital in the partnership for the year ended 31st December 2003. Okay, that means they're giving some debentures to the partners. That means discharge of purchase consideration is in the form of debentures partly. Equity shares to be issued at par to each partner in proportion to their share in the partnership profits. I think these 2 points are discharge of PC. Discharge of PC. This is second point. One is PC. This is discharge of PC. Then after that, this is about final settlement. What they are saying, any surplus or deficiency on partners' accounts on realization after taking into account debentures and shares issued is to be withdrawn or paid, whichever the case may be. What they are saying, see, any surplus or deficiency partners' accounts on realization after taking into account, see, after transferring of relation profit or loss, then issuing debenture shares as per point number 4 and 5 is to be withdrawn or paid in means if partner is having surplus, even after getting surplus means still credit balance is showing more. Suppose 100 rupees is credit balance. That means you have to pay 100 rupees. You are given 20 rupees debentures, 30 rupees shares. 100 minus 50. 50 rupees you have to pay in cash. Suppose ex-partner, 100 rupees is the amount due after relation profit, etc. 20 rupees debentures you have issued, for example. 20 rupees shares you have issued, for example. What is the balance? This 50 rupees. 50 rupees is to be paid in. Withdrawn or paid in. Withdrawn or paid in means, withdrawn means this is withdrawn. Withdrawn means taken out. You take the other option. Suppose this is 30 or say 40. Your 40 is the amount due to actually Y partner, for example. Debentures 20. Shares 30. That means you are supposed to pay 40, but you are given 50. How much you should bring? 10. That means he has to pay. He has to bring. In simple words, after transferring relation profit or loss, whatever it may be, and issuing of debenture shares, if any partner still amount is due to any partner, we need to pay cash. That means he is withdrawing the cash. And if any partner is having deficiency, that he has to bring the cash. Whether this point is given or not, when you prepare partner's capital account, simple logic, if credit side is showing more, we need to make a payment. If debit side of partner is showing more, he needs to bring the cash. I repeat once again, if credit side of partner is showing after all this adjustment is more, he will withdraw the money. If debit side of the partner is showing more, that means he needs to bring the cash. Okay, so here this is what final settlement. Simple words, that is excess to be paid, deficiency to be brought. Excess to be paid and deficiency to be brought in. Clear to all of you? This is all about the final settlement. Now, your computation of the shares and debentures in fair value limited to be issued to each partner. Partner's capital account in columnar form, showing all necessary entries, nothing but columnar form entries means ledger entries. Simple words. It is nothing but ledger entries, not journal entries. Columnar form means you will be opening partner's capital account. So, showing all necessary entries means this is ledger entries. Clear to all of you? No need to open, no need to write journal entries, ledger entries. A balance sheet of the company upon the completion. your computation of shares and debentures in fair value limited to be issued to each partner. I think we start with, of course, he is not asking realization account, but without realization account, you cannot go for problem. So, point number one, what I have done is here, ascertainment of purchase consideration net worth method, net asset method has been explained to you. Then, as per the solution, is asking it is to be part and parcel of the problem that how you are going to issue debentures and shares. So what I do, I start doing the problem, including realization account. Even though he's not asking the realization account, we can go as sequence. So what I do, how debentures and shares has to be issued, that I am going to explain today. First, this is important point. In the meanwhile, before I start explaining, look at that fourth point. You all read for yourself in a minute, so that what you will be able to draw your own interpretation on that. What interpretation you can draw on that particular point. Fourth and fifth. Simple words, okay. Sufficient 9% unsecured debentures is to be issued by the company to the partner so that they will receive the same interest as received on capital. So what the company is doing, see, it's a new company, no? In a new company, when it's a new company, they are getting interest on capital here. Interest on capital. Now what they are saying is that, okay, we are giving interest on capital, and in future the partners want that the same interest they should get as they were getting as a partners, because the moment you float a company, you can't say that the day one the company can pay dividends. It will take some time. So you need to get a profit. After only getting profit, the company can start giving dividend to the shareholders. Partners will become shareholders because they're giving shares to all partners, no? So the partners, what they have decided, they know that previously they are very happy as a partnership unit. They were getting interest on capital, they're getting share of profits. Once they convert this into company, it may take some time. So whether they get profit or loss, they can't say. That is why what they are asking, we want without any security, as per agreement. This is the company is going to issue sufficient 9% unsecured debentures to the company, to the partners, so that they will receive the same interest as they received on capital. What is the interest they have received on capital? 3,600. Same 3,600 they need to get. But this amount is equal to 9%. Simple words. X wants, I am taking one example. X wants 3,600. But this 3,600 should be equal to 9%. Now the question is that if you issue how many debentures, or what is the value of debentures if issue, so that he is going to get 3,600. That means X wants to get 3,600 as interest in future. X will become a shareholder, but company is going to issue debentures. So the demand of the partners is that whatever the interest X was getting earlier 3,600, Y was getting earlier 2,700, Z was getting 2,250 earlier the interest, the same interest they should get by getting debentures. And that interest must be equal to 9%. Now the question is that what is the value of debentures? If 3,600 is equal to 9%, 100%, how much? You will be getting 40,000. You can cross check. 3,600 into 100 into 9%. Now you can cross check. If you issue 40,000 debentures to X and 40,000 9%, you'll be getting 3,600. That means on the basis of interest on capital, you are trying to find out the value of debenture that is been issued. I repeat once again, on the basis of interest on capital, company is going to issue debentures. That means they want to get 3,600, but this 3,600 they are going to get in the company by getting debentures at the rate of 9%. So to get 9% interest, which is equal to 3,600, how many debentures they should get? 40,000. Similarly, 2,700. Who wants? Y want 2,700 at the rate of 9%. So how many debentures you should give? 2,700 is equal to 9%. 100% how much? I think you'll be getting 30,000 like that. That means on the basis of interest on capital, they are demanding that we want same interest on capital so that partners will get some income. That is what. So for getting income, they need to get debentures because company won't pay interest to shareholders. Of course, there is a clause. I have recently I have not seen in 1956 Companies Act. We used to have a clause. I'm not updated myself, frankly speaking. As per Companies Act 1956, there's a delay in commencement of the business. There's a provision in the Companies Act that they can get entitled to get interest on capital also. There's a clause in Companies Act 1956. Of course, that is too much. We are deviating. I don't want to deviate to that extent. So, what I am trying to tell you is that so 3,600 rupees they should get as they were getting earlier. For getting that, the company has decided to issue debentures. That is 9%. But we don't know how much. What is the value of debentures? So 3,600 is equal to 9%. 100% how much? Similarly, to get 2,700, 9%. What is the value? 2,709 is equal to 9%. 100 means I think you'll be getting 30,000. So is the case. 2,250 is 9%. Like that you'll be giving debentures. Okay. So here the important point is that excuse me. So let me take you to this. Let me make a point here. Debentures are issued on the basis of interest on capital. Simple words. Debentures are issued on the basis of interest on capital. Then equity shares are issued at par to each partner in proportion to their share in the partnership profits. Simple words. Equity shares are to be issued on the basis of profit sharing ratio of the partners. Last class we said 1:1 equally. Equity shares are to be issued on the basis of profit sharing ratio. Now, you don't have profit sharing ratio, you can see with authorized share capital. Sir, we don't have profit sharing ratio, sir. In proportion to their share in the partnership profits. We don't have profit sharing ratio. You can read the problem, you don't have. Then, sir, how to get it, sir? How to get it, sir? Here, share of profit. This is. That means 30,630 is to 30,630 is to 20,420. If you go for calculation of ratio, you can go for the ratio. It is something like 3:2. Here to all of you, it is to be 2. It is going to be 3:2. Okay. I think you all are able to follow this. 30,630 is to 30,630 is to 20,420. Okay. You can cross check if you want the ratio is right or wrong. You can see, my dear friends, 20,420 by 2. Take the calculator. 20,420 by 2. You are getting how much? 10,210. 10,210 2s are 10,210 3s are 10,210 3s are. It is coming to 3:3:2. That means profit sharing ratio is 3:3:2. That is what is important here. Here I have written equity shares to be issued on the basis of profit sharing ratio. Now the question is that your computation of the shares and debentures in Fairway to be issued to each partner that previously we used to show as a working notes. Now it has to be like a solution. Okay. So we go for doing the problem now. It is solution only, not working notes. Computation of shares in Fairway Limited to be issued to each partner. Computation of so heading I have written as per the question. The question is that first of all, shall I have to compute the shares or debentures? First, you have to compute the debentures. After knowing the debentures, balance of shares will be given according to profit sharing ratio. So here I am writing A. Issue of 9% unsecured debentures unsecured debentures to partners on the basis of their interest on capital. Now that is debentures to X. I've all told you 3600 is equal to 9%. 100 is how much? Am I right? 9% debentures, 100% is how much? If you go for calculation, you'll be getting 40,000. I've all told you. Similarly, why? 2700 interest on debentures, he was getting 9%. 100% how much? That means if you issue 40,000 debentures, 40,000 9%, 3,600, who is going to get in future? In company X is going to receive interest of 3,600. For that, he needs to be given 40,000 unsecured debentures. Now here similarly 30,000. Now let us look at Z. I think Z what was interest he was getting? 2,250. Okay. Z to get 2,250 at the rate of 9%, how many debentures we need to give? 2,250 divided by 100 into 9. 25,000 debentures. Now you can cross check 25,000 9%, 2,250. 30,000 into 9%, 2,700. 40,000 9%, 3,600. Clear to all of you? Okay. Now what is the total value of debentures issued now? 40,000, 30, 70, 95,000 worth of debentures has been issued. So total purchase consideration we have already calculated. Out of 2,95,000, what is the value of debentures issued? 95,000. Value of debentures issued. Now note. Now the balance purchase consideration due the balance purchase consideration due, that is 2 lakhs. What is the total purchase consideration we got? 2,95,000, no? 2,95,000 minus 95,000. The balance purchase consideration due, that is 2,95,000 minus 95,000. 2 lakhs will be issued in the form of equity shares according to their profit sharing ratio. Profit sharing ratio is not given, so that is why we are going according to the share of profit. You can see that share of profit 30,630, $20,420, which is nothing but 3:2. Clear to all of you? 3:2. Okay. Now the balance purchase consideration due, that is 2,95,000 minus 95,000. 2 lakhs will be issued in the form of equity shares according to their profit sharing ratio, that is 30,630 issue 30,630 issue 20,420. I have already explained you how to calculate this. Okay, now therefore here I am writing, therefore value of equity shares given to partners. First X. He has to get 2 lakhs, no? 2 lakhs into 3/8. You're getting 75,000. Why? 2 lakhs into 3/8 is also getting 75,000 only. Z. 2 lakhs into 2/8, you're getting 50,000. Clear to all of you? This is what you're giving them, value of equity shares is equivalent to 2 lakhs. So the purchase consideration, now we clear, purchase consideration is discharged here. So now we can say purchase consideration due is discharged by issue of debentures and equity shares. This is important. Equity shares. Okay, and one more thing, you should also understand that for transfer of, this is just for you to have a note, for transfer of realization result, means maybe realization profit or loss, realization result profit sharing ratio is same as above, that is 3:2, because we don't have profit sharing ratio in the problem. For transfer of realization result can be profit or loss, same as above, means here same 3:2. Clear to all of you? I think now the working notes has been completed. Now we can go for, actually relation account is not asking. Without relation account you can't do, because it's one asset, two assets we can do. But since you are comfortable in doing it without relation account also, directly you can transfer the result through statement, you can do it. But most of you are comfortable in doing relation account, that is why I am going for relation account. So Point number 1 has been completed. Point number 2, realization account. Then I have to go for same as usual, partners capital account. Current account balances we can transfer directly to partners capital accounts. Unless he is specifically asking you to open it. Excuse me. Then I'm also going to open bank account. On this problem, equity shares, debentures, I'm not opening. We have seen already it's not required. How to last problems, just to explain you, a purchasing company account, equity shares in purchasing company, debentures in purchasing company. That these three things I'm avoiding now. And they are also asking you to prepare balance sheet. Clear to all of you? Okay. Let me start with this. Then balance sheet I can go later on. So let me start with first the posting part of it. The assets will be transferred book value first. Agreed value is for purchase consideration. For transferring assets to relation account, it is at book value. Everything I have been telling you clearly. You go back, listen to me, listen to my explanation. If you want, you can have some scribble pad like that. Whenever I am saying an important point, you make a note of it. Realization account, book value or corrected book value. For purchase consideration, agreed value. Please try to understand. For realization account, book value or corrected book value, because if there is an error, corrected book value, otherwise book value. For purchase consideration, agreed value can be book value, more than book value or less than book value. It is, we are least bothered about whatever the as per agreement that that need to be followed. Okay, now let me start with assets as usual we do. So realization account first to freehold. Acha, one thing, when you are having the realization account, we also can do like this. Whether this is an account or not, we don't know. If it is an account, that's okay. If it is an account, what is that you should do? Book value you have to transfer. But since cost has been given, cost to be transferred to relation account debit side, provision for depreciation should be transferred to the other side. Normally book value, but since cost has been given, depreciation has been given, cost is, that means they are following accumulated depreciation method. Okay, so cost will be taken to relation account debit side and provision will be taken to relation account credit side. So let us start with freehold land and buildings. See, I told you cost is when you don't have accumulated depreciation. When you got accumulated depreciation, cost will be taken to debit side, provision for depreciation will be taken on the other side. We freehold land and building 1,30,000, we don't have any provision on this. Then next one, plant and machinery 2,10,000. Then we got motor vehicles 98,500. Clear to all of you? Motor vehicles 98,500. Then Come back to this. These two depreciations will be taken to relation account credit side. By provision for depreciation, or you can say equipment depreciation. Plant and machinery. Plant and machinery 1,10,000. 23,500 is 23,500. This is completed. Now stock etc. Stock 1,12,000. So stock 1,12,000. Data 61,000. Bank balance I told you to the extent taken out, not entire bank balance. Because in the new company they need cash now, that is why they are taking cash balance also. 75 to the extent taken. So this is important by now. Normally I've opened bank account to tell you why I've opened bank account is bank to balance brought down. Actually bank balance is 98,750. Out of 98,750 they have only taken 75,000. So by realization, entry is realization to bank no to the extent taken by the company. To highlight this point, I have opened which account? Bank account. Otherwise, even if you don't open bank account also, it is clear to you. Then next, this is completed. Then Kratos also they have taken it 1,70,000. This is only difference between current assets, current liability. Don't consider about this. Okay, 1,78,000 by Kratos, 1,78,000. By Kratos 1,78,000. Clear to all of you? Now let me take you to like capitals. Now capital account 120 90 75. By balance brought down 120 90 75,000. Then current account balance. It's a waste of time by starting 59,700, add interest on capital, share of profit. Again, you have to open current accounts or all the entire stuff you have to show in capital account. It's a waste of time. Directly, the current account closing balances can be taken to capital accounts. Otherwise, you have to open all the current accounts. Already it has been shown. Why should you again open current accounts? Wasting of your time. So directly I am taking closing balance of current accounts. Are you following? I hope you got the clarity. Otherwise, you have to open current account 59,700, interest on capital, share of profit. These to be created, drawing system deducted. Then closing balance. This closing current account balances will be transferred to capital account. Why unnecessary waste of time? So directly, since he himself has given, this current account closing balances can be directly transferred to capital accounts. Okay, because the question of fixed capital, fluctuating capital does not arise because you're winding up the company, winding up the partnership firm and floating it and selling the firm to company. So directly I can take 49,300. Think you all are able to follow this. Directly closing balance. This is last year balance. This is I want balance on 31st December 13. So these three values will be transferred to capital accounts by current account. Come on, you write one by one. 49,300. 300. 49,300. 32,100. And 32,350. 32,350. See at all of you, 49,300, 32,100, 32,350. These balances have transferred. So capital account balance also has been transferred. Now you have to go for what is entry for purchase consideration. You know that purchase consideration entry. We have already calculated purchase consideration 2,95,000. What is entry for this? Purchasing company account at R to realization account. No. So realization account by purchasing company. What is the name of purchasing company? Fairway Limited. Fairway Limited PC due 2,95,000. So please remember this Fairway Limited, how we got 2,95,000. They have taken freehold land, plant and machinery, motor vehicle, stock, debtors, not motor vehicle, except this freehold land, plant and machinery, stock, debtors, bank balance, and creditors, and they have paid 2,95,000. So all assets, liabilities, except bank balance, except motor vehicles, taken by the purchasing company. Now the motor vehicles have been taken by the partners. That has been given here. We have seen that. The motor vehicles are to be drawn from the business by partners. 24,500, 17,500, 18,000. What is the entry for that? Who is the receiver? X capital, Y capital, Z capital to realization. In realization for assets taken by partners, capital accounts. Motor vehicles taken over. This is also agreed value. X 24,500, Y 17,500, Z 18,000. Okay, now this XYZ will be writing to realization account, motor vehicles taken over. $24,500, 17,500, 18,000. So now we don't have any realization expense in the problem, so we can go for closing of each account now. Realization account. So if you, I think realization account, it's in this problem, it seems to be debit side is showing more. So 1,30,000 we cross check, plus 2,10,000, plus 98,500, plus 1,12,000, plus 61,000, plus 75,000. It is coming to 6,86,500. You're getting 20,000 loss. This 20,000 loss will be transferred to partner's capital account. I've already told you, loss will be transferred according to their profit sharing ratio. And that profit sharing ratio we have already calculated for distribution of equity shares. X 20,000 into 3 by 8. You're getting 7,500. Y and Z 20,000. 5,000. So loss transferred. Loss transferred. Clear to all of you? Okay, so this is loss is transferred to whom? Partner's capital account. Here I am writing to realization. Loss 7,500 to X, 7,500 to Y, 5,000 to Z. Now we got the information that debentures were issued, no? 9% unsecured debentures in Fairway Limited. Then they have also got some equity shares in Fairway Limited. You're given debentures to whom? Partners. 9% unsecured debentures to equity shares in Fairway Limited. We have already calculated working notes number 1. Debentures, what is the value of debentures given? 40, 30, 25. 40, 30, 25. And shares were given like 75, 75, 50. We have already done that also. Here you can see shares issued 75, 75, 50. Now, so after doing this, if any partner whose capital account is showing debit balance, he needs to bring cash. If any partner whose capital account showing credit balance, we need to make a payment. So I think if you look into this, let me start with first X. We have to cross check which side is showing more. First, let me start with credit side. 1,20,000 plus 49,300. 1,20,000. 49,300. First, let me write this amount. 1 lakh. So let me see whether this 1,69,300 is more or not. So 1,69,300 seems to be more. Right side seems to be more. Let me cross check. 7,500 minus 40,000 minus 75,000. Yeah. How much X is having excess? 22,300. Even after giving him shares and debentures, still what is the amount due to X? 22,300. This is to be paid in cash. So I am writing to bank final settlement. That is excess paid or excess withdrawn. Okay, excess withdrawn or excess paid. Now look at Y. Y, it seems to be debit side is showing more because it is only 122. Here itself you can see it is more, 75 plus 30, and these two add. I think Y debit side is showing more. So Y, let me go for totaling of Y debit side. 17,500 plus 7,500 plus 30,000 plus 75,000. These kind of problems we have done in adjustment of capitals in partnership firm. After adjusting the partner's capital, the partner who is having excess capital is to be paid in cash. The partner who is having deficit has to bring in cash. This kind of adjustments you are learning in group CA foundation. Okay, it is 1,30,000 here. 1,30,000. 1,30,000 minus 90,000 minus 32,100. It is coming to 7,900. That means you are paying him cash. So by bank, he is bringing cash. Sorry, by bank, deficit brought in, because it's a dissolution, because that means he got more shares and more debentures. That is why he is supposed to bring the amount. He has got more than what he's supposed to get. That is why he's bringing the cash. If you don't bring cash, how can you make payment to the partners? So deficit brought. Okay, now let us look at the other side. I think here Z credit side is showing more because 75, it appears to be credit side is showing more. 75,000 plus 32,350. It is coming to 1,07,350. 1,07,350 minus 18,000 minus 5,000 minus 25,000 minus 50,000. 9,350 you are paying excess. So one partner is having deficit, other partner is having excess. Now after transferring these balances to bank account, if bank account is closed, our problem is correct. Let us check that. So here I am writing to who brought the cash? Y. How much he brought? Y. 7,950. Now you are making payment to whom? By X and by Z. X, how much you are paying? 22,300 and 9,350. So 98,750 plus 7,950 this has to be closed. Let us see. One lakh 6,000. 98,750 he brought 7,900. Okay, 7,950. So 98,750 plus 7,900 is coming to 1,06,650. Okay, 1,06,650 minus 75,000 minus 22,300. It's tallied. So that means the bank account also has been closed. So this problem, purchase consideration important point, and issue of debentures and shares. Issue of debentures is based on interest on capital. Issue of shares is based on profit sharing ratio. Profit sharing ratio is not given. Profit sharing ratio you were able to ascertain on the basis of share of profit. Clear to all of you? I think this is all about your problem. Now these three accounts has been closed. So I went for realization account, I went for partners capital account, I went for bank account. Which one I have avoided? Issue of shares and debentures. Now I need to go for balance sheet. He is also asking to go for partners capital account and also a balance sheet of the company upon completion. It can be called as opening balance sheet. So for that, first I should go for notes to account. We learned that in company accounts, notes to account, the first point, share capital. I think in the problem he has given authorized capital, it seems to be 10 lakh shares of 10 each, rupees 10 lakh in shares of 10 each. So authorized capital. Issued comma paid up. So here authorized share capital 10 lakhs by 10, no, you are having 1 lakh why I am writing 1 lakh shares, which authorized can be equity or preference. That is why I'm just looking into what that authorized capital has been. 1 lakh shares of rupees 10 each. Okay. And you know authorized capital, we underline it. Then issued comma, directly we can write issued comma paid up. So 2 lakhs you have given, no? 2 lakhs worth of shares you have given. So 2 lakhs by 10, it is coming to 20,000. I think that is equity shares. 20,000 equity shares of rupees 10 each. It is coming to 2 lakhs. Here you write issue of equity shares for consideration other than cash. The reason is that these shares have been issued toward discharge of purchase consideration. Issue of equity shares for consideration other than cash to discharge PC. PC means purchase consideration. Okay, this is completed. This is note 1. Note 2. Note 2. We don't have any reserves and surplus. Then we got only 9% debentures, unsecured loans. 9% debentures. It is coming to, we have done 95,000. We have calculated already. I think in the beginning itself we have calculated. $95. Okay. Then third point, trade payable. When this no need to mention. Freight was taken by the purchasing company at 1,78,000 agreed value. What is it value given? 1,78,000. That's it. Next, fourth, tangible fixed assets. This you should write agreed value. Please try to understand. We need to write agreed value. Land, freehold, land and building. Freehold land and building. What is freehold land and building agreed value? I have written here 1,50,000. Plant and machinery 75,000. Then fifth one, inventory. Inventory himself has given 1,12,000. Trade receivable. Just actually this we can write even in the balance sheet also. Just to explain once again, I'm writing, that's it. Because you got a long gap now after group 1 examination, almost 1 month I think. Trade receivable more than 1 month maybe. Trade receivable is taken at 61,000. Seventh point. Cash and cash equivalents. Is bank balance 70. That's it. Now we can go for balance sheet. One items you don't need, but to explain, you can avoid this directly. You can write in the balance sheet also. Balance sheet of Fairway Limited as at 31st December 2003. I think we don't have the date of incorporation, but I think he has given the balance sheet of partner on 31st December incorporated. So I taken the same date, 31st December 2013. and you know that particulars, notes, amount in rupees. First, equity and liabilities. Equity and liabilities, share shareholders funds, we are having only one item, share capital, note 1 2 lakhs, we don't have reserves and surplus etc. Directly to long term borrowings, %9 at long term borrowings, unsecured loans, because I already given that heading, no. So what I am doing, long term borrowings, unsecured loans. Again, description I need not give you because I have already given that in note 2, 95,000. You can see that note 2 I have given already. Here 95,000. Then third point, this actually 1 minute, this is non-current liability setting. So already I have given that, so directly I am writing long term borrowings. Next, current liabilities. Trade payable, that's it. Only one item I am having. That is note number 3. For this actually I can avoid 1,78,000. Then I can write total here. 2 lakhs plus 95,000 plus 1,78,000. It is coming to 4,73,000. The next one, assets. In assets, first point number 1 here, I start with non-current assets. Non-current assets, in this tangible, non-current assets, tangible fixed assets. I think now we are calling as a property, plant and equipment, PPE. Tangible PPE you can write, or I think you know that PPE, fixed is nothing but nowadays property, plant and equipment, accounting standard 10. Property, plant and equipment, tangible assets. I've done already notes here. Note number 4. What is the value I got? Tangible fixed assets. Two lakh 25,000. 2,25,000. Okay, then I'll be going for current assets. inventory, trade receivable. Even the data has been given, I will be taking as a trade receivable, and inventory, trade receivable, last item, cash and cash equivalent. Here trade receivable actually is nothing but, in this case we are having debtors. The problem debtors has been given, I'm writing inventory 1,12,000, 1,12,000, 61,000. We are having 7 notes now. 75. Now you can go for totaling of it. Two lakh 25,000 plus 1,12,000 plus 61,000 plus 75,000. It is coming to 4,73,000. Clear to all of you? This is what your total is all about. Clear to all of you? This is how you have to prepare the balance sheet also. Balance sheet of Fairway Limited. This will become 4th point. Can be called as opening balance sheet. So with this problem has been completed. Only thing is that lengthiness is the problem that you need to slowly practice. That's it. Okay, we'll meet in the next class. I hope you got the clarity. We'll come out in the next class with one more problem. Till then, goodbye. Thank you. God bless you all.